Hello everybody. So today I want to talk about benchmarks, specifically the S&P 500. Is the S&P 500 going to remain the main benchmark going forward? And do we have other benchmarks that actually love high returns, that actually love MSTR? And what will MSTR's place be among all of these benchmarks in the future? So the S&P 500 in recent history, at least for most investors still alive today, the S&P 500 has been the historic measuring stick, and the S&P 500 is often used as a reference for fiat derivatives, and stocks, of course, are these fiat derivatives. And the present value of future cash flow in fiat as represented through the S&P 500 who ends up owning all of these stocks. And as fiat fails, my guess is that we will need new measuring sticks. First principles thinking versus inertia. Why are we always using the S&P 500 to judge performance? I think that is a big question. As you know, on this channel, I judge my investments performance against the NASDAQ. I've historically found the NASDAQ to be a much better benchmark. The NASDAQ does not have nearly as many zombie companies, as many companies that are in the way of disruption. The S&P, of course, has plenty of those. And the question here is, of course, today the S&P refused to include MSTR. They passed on MSTR. And so the better question is, what does that mean for the S&P? Is it an indication that the S&P is losing touch? In other words, should we judge something about strategy? Should we assess strategy and say strategy is not good enough based on the S&P criteria, or should we judge the S&P 500 based on their ability to continually reject winners and to prevent winners from being included in their index until it's too late? It's as if the S&P was keeping winners away, keeping legacy alive. And so again, in my view, the fact that the S&P rejected MSTR tells us much more about the S&P than it does tell us about MSTR. And it does tell us that the benchmarks may in fact be outdated, and it may in fact be time to use a new benchmark other than the S&P. And of course, on this channel, I have praised multiple times the NASDAQ 100. The NASDAQ 100 gets some major kudos from me. The NASDAQ 100, of course, has included MSTR as soon as MSTR became eligible. You remember, right? That was not a year ago, but almost 9 months ago, 9 to 10 months ago, we had inclusion of MSTR into the NASDAQ 100 because the NASDAQ 100 doesn't use a committee. And by the way, Tesla was also included early in the NASDAQ 100, again, because it is not a committee that is holding high-performance companies back. And if you look at the performance of the NASDAQ, the performance of the NASDAQ is actually above the S&P 500 by a wide amount. You're looking at a 13x over 17 years versus a 6x over 17 years. So, of course, the NASDAQ has outperformed the S&P 500. Note that one of the companies that was added to the S&P yesterday was AppLovin. AppLovin has already been added to the NASDAQ early on. The NASDAQ is just rules-based. The only thing that, may be working against the NASDAQ, of course, is that they never included Robinhood, because Robinhood was supposedly deemed to be a finance company or a financial company. They're much more than that, if you ask me, but because it's like associated with financial institutions and banks, it's not in the NASDAQ. I'm honestly surprised the NASDAQ 100 excludes those. Maybe they should add it back. It's not like you would have that many banks in the NASDAQ anyways. So there is a little bias on the NASDAQ because of that, because it has to be a non-financial business. And this is because of a decision that was made 40 years ago. So the NASDAQ is much better than the S&P, not nearly as good. What could be the benchmarks of the future? So let's talk about two ETFs that I've discussed on this channel. First of all, ONB, which is the Bitwise ETF. If you look at the Bitwise ETF, it has beat the S&P 500, even though it's only 6 months old. This ETF is only 6 months old. And if you look, it has outperformed the S&P by a wide margin at 26% total return versus 17%, 53% annualized. So this is a company that has outperformed the S&P 500 and the NASDAQ. It's not a company, of course, it's an index. And of course, why have they outperformed? Well, let's look at the leading companies in there. You can see Strategy is the number one holding, followed by Mara. Riot is in there, not too late, right? And then you have Hut 8, and you have all of these other companies. So if you look at the top 100 public companies that have a treasury, and if you look at the Bitwise ETF, you can see it matches pretty closely with strategy number one, followed by Mara, and then it's strategy number one, followed by Mara in the ETF. And of course, there's a rebalancing happening. My guess is that we'll see bullish will be added. My guess is that once 21 Capital actually goes through the merger, they will be included as well. I view ONB as perhaps one of these ETFs that will much better represent the future of benchmark and represents the future of treasury companies. And I view this ETF as highly likely to outperform in my view. You can see it has, it has Coinbase, it has MetaPlanet, it's got, CleanSpark, although it's been sold off a lot, but it still has that. It's got a lot of good companies. Maybe some of those other miners are not as good. Maybe the Exodus wallet is a weird choice, but they have a methodology, more than 1,000 Bitcoins on balance sheet, and you become eligible, and then they order rank them. They have 3 categories that are used to order rank, and so it's pretty much a guarantee that strategy will remain the number one asset in this ETF. ONB, I like this ETF very much. It's low volatility and it's highly diversified, and you don't get subjected to the whims and the likes and dislikes of the market. It's highly diversified. I much prefer this one over the S&P 500. Of course, I don't own the S&P 500 at all, right? I do own the NASDAQ. I like the NASDAQ, and I like ONB. Another company which is a little older is Block. So could Block be one of the new benchmarks? In my view, probably not. I find Block a little more inferior than ONB. ONB is the one I like the most. I find Block a little inferior because Block is a little weird. Like, it includes companies like Bed Bath & Beyond. Why does it have that? It's got a few weird holdings, like new holdings. Yeah, sure, they do a little bit of Bitcoin. Bed Bath & Beyond, I'm sure they accept a little bit of Bitcoin. Like IBM, what's IBM doing in there? So they have a few weird holdings in there, but they obviously have Strategy as a top 5 holding right here, or top 6, I guess. They have Galaxy. Galaxy owns a lot of Bitcoin. They have Robinhood. Robinhood is a clear Bitcoin player. Coinbase is a clear Bitcoin player. So Block is another one of these companies which focuses on the very companies that the S&P really doesn't want to add. And Block has beat the S&P also very nicely, 18% average annual return versus 13%. So this is a return that's slightly higher than the NASDAQ as well. So once again, the companies focused on the blockchain, focused on Bitcoin, focused on DeFi and finance of the future. These ETFs, these companies are doing better than the S&P 500, who just rejected MSTR as expected, right? As expected. And I want to get into, long-term thinking, talk a little bit more about, the old world, the legacy world, the analog world, moving to this new world of digital finance, this new world of Web3 in general, this new world of blockchain, this tokenized world. Because overall, I think what's going to happen, and of course these treasury companies, they get a lot of attention, but overall, I think what's going to happen is that you're going to see companies get delisted from traditional exchange and want to be entirely listed on cryptocurrency rails. And of course, Kraken and Gemini have begun doing that with tokenized stocks. I see a future where you could have a company who just decides to be a tokenized stock and doesn't decide to be listed on the legacy benchmark, on the legacy exchanges. And in my view, this could facilitate the flow of capital, and this could allow them to access much more capital. And maybe for a period of a few decades, maybe being dual listed on modern rails and listed on legacy rail is maybe going to be the way to go. But stable coins, I think, are going to prove very much superior to bank deposits. I mean, they're instantaneous, they're fast, there's essentially no fees. If I compare stable coins to the old way of doing things, it's not even funny. For example, as you know, on this channel, I bought MetaPlanet a few times, and every time, I have to go through a legacy broker, Charles Schwab, and not only does Charles Schwab charges you $50 to buy MetaPlanet, but it also wants you to have fully settled funds, which means that it takes between 5 and 7 business days to have fully settled funds, and of course I don't use Charles Schwab unless I have to. Right, and I think it's going to be more and more like that. So you have to use Charles Schwab. You have to pay a $50 fee. And if you want to make the trade on the day you decide of a trade, you got to pay $25 in wire fees and $50 in trade fees. That's $75. That's like worse than gas fees on ETH, on like a bad moment of ETH. I mean, this is really crazy. This is really expensive. Of course, if you did this on Solana rails with a token listed on Solana and with stable coins, that would cost you $0. And by the way, stable coins, in my view, they're going to prove very superior to banks also, because that law that they passed on stable coins, it seems like there could be carve-outs in the law for yield. So I know a lot of people have reported they won't have yields. They may have yield at some point. So the velocity of the money moving from stable coins, i.e. a stable coin dollar, to a tokenized stock, that could be done without intermediaries. That could be done very quickly. Of course, it could be done over the weekend. Remember, the markets are only open 19% of the time. With this system, you can do it at night. You can do it over the weekend. You can do it wherever you live. You may be in a time zone that's no good for US stocks. You could entirely do this 24/7 on stable coins and tokenized stock rails on a blockchain like a Solana or Ethereum. Will companies in the future just issue tokenized stocks? That's part of my vision, and I think strategy should probably be much more proactive in having tokenized stocks. And then will blockchains, and this is a big deal, this is where I think the world is headed, will blockchains replace entire companies? And the answer to that, in my view, is wholeheartedly yes. You'll have a lot of financial companies, banks, lending, etc., but also a lot of Web 2.0 company, like a social network. These companies, in my view, are at threat, or communications network, right? In my view, they are at threat of being disrupted by blockchains. And so then you end up in a situation where the blockchain is just a blockchain. It just has its own native token, and it's kind of owned by the users, because the users are typically those who get the tokens, right? If you look at the history of Bitcoin mining, the early Bitcoiners, those who first got the Bitcoin, they got it by running the Bitcoin network, by supporting the network. And so if you have a social media Web3 of the future, who's going to own that social media? Well, it's going to be the users of that social media who are going to receive tokens for using the social media. So where will the wealth accrue? Will the wealth accrue to the S&P 500, or will the wealth accrue to a new financial system? And I fundamentally believe more and more the wealth will accrue to a new financial system. In fact, I believe a lot of the new wealth to be created, and we care about the new wealth, right? Because the old wealth is already placed. The old wealth is already in real estate. It's already in S&P 500. It's already in old world companies. That wealth is fixed. It doesn't have the velocity of new wealth. New wealth and that velocity associated with that new wealth, in my view, it will flow into a digital world, and it will flow into assets like ONB, assets like MSTR, assets that own these tokens, and Bitcoin being, of course, the biggest use case right now. So I think the digital world will dwarf past accumulated capital in the analog world. And I have a few silly examples, but think about like a kid with a CryptoPunk collection. Most CryptoPunks these days, they are like $500,000, and they've been called dead. I remember a few years back, everybody thought they were dead. Well, you're sitting on a lot of money if you're sitting on these today's, right? How about people, DeFi is very popular. How about people who do some yield farming and are very comfortable with staking and liquidity token pairs, and a lot of people make a lot of money doing that, and they're typically young people, in their early 20s. There's a saying in crypto, if you're over 25, you might be too old for crypto, but that's the new generation coming, and there's a lot of money that they make. What about airdrops? Airdrops, not my generation. I think a lot of viewers will not probably be able to relate with airdrops, but airdrops are blurring the line. You're blurring the line between owner and customer, right? Owner and customer. So if you look at the stakeholders of a company, it's entirely possible that the shareholders somehow disappear, and the shareholders becomes the customer. The customer and the shareholder become one and the same, right? It's the same concept as a mutual, but you're really taking that concept to the extreme. And airdrops, there's all sorts of them, but there is such a thing as a free lunch in the crypto world, which is if you're a user of the exchange, say an exchange you use like Jupiter or whatever, if you are a user of the app, if you're a user of a video game, you can earn the token of the app or the token of a video game. And so I'll give you an example. This is one of many examples, but you can see, for example, this is a Web3 app, right? A Web3 app being backed by a whole bunch of VCs, including Coinbase, A16Z, so very serious stuff, and that's the app, and it's a social media competitor entirely built on Web3. I have no idea whether it's going to work or not, and of course many of these projects fail. That's the concept of venture capital, and some will fail and some won't. But how do you end up owning this? How do you want to own this? Well, all you need to do is create an account and keep it active and use it. And if you register to this social media platform, and if you use the platform, you're gonna get airdrops. You're gonna get tokens as your reward for using the platform. So going back to this original concept, what's the value of Facebook? Well, if Facebook was launched in a crypto world, the value of Facebook would have accrued to Facebook users. And Facebook users who use it more, who have more friends, maybe get more airdrops. Those who use it less, maybe get less airdrops. And if you look at how value is created, right now, value is created, take video games communities. Really, the value of video game community comes from the gamer. But right now we're in this dual relationship where you have those who financed the game, and then you have the gamers, and the gamers give money to those who financed the game. Well, this is entirely going to be upside down in a world where not a lot of capital is needed to launch a game or to launch a movie or to create intelligence of any kind. Little capital is needed, less and less capital is needed, and so you're going to be able to have companies, and they won't be companies, they will be pieces of software, but you'll be able to have pieces of software where most of the value was created by actual users. It's actually the users who are creating most of the value, and that's why you see a blurred line between the users and the owners, and it's going to take less and less capital. And so I think a lot of wealth is going to be created that way. A lot of wealth is going to be distributed that way, and that wealth is going to flow into assets like MSTR, who are going to be traded on these tokens. It's going to flow to these new benchmarks. And when I see the innovation in this sector, I tell myself, who's creating more wealth, right? Someone who's savvy enough to spot the Solana phone and bought the Solana phone early and got thousands and thousands of dollars of airdrops and free stuff. And of course, now that would be worth probably way more even than that. I'm talking about the former version of the phone. Or is it someone who, I don't know, just does DoorDash or Deliveroo and do that for a living? Right? It's very, very tough, right? Customer rep, local restaurant manager, a gym coach, right? There's lots of those, thumbnail designers. Apparently, a lot of people think I'm a good candidate for a thumbnail design service, and they want me to use them to create thumbnails for me. Apparently, the new local real estate agent who starts in their community and they're just starting out. If you look, a lot of the analog jobs are struggling. right? A lot of analog jobs, I'm just taking random examples, that are available to new workers, to new capital, right? People in their early 20s. A lot of these jobs in the analog world are really, really bad. But a lot of the opportunities in the digital world, in the crypto world, are really, really good. And sure enough, we see a lot of people who are making a living in this new world. And I think over time, the capital will be in these new cohorts. That's where the capital is. The new capital will be in these new cohorts. Yeah, sure, the wealth is still held by the older folk, but that wealth is also locked. And so I'm sorry, this is a long-winded thesis, a long-winded way to say that going back to all of the wealth in the world, this is all of the wealth in the world. And you can see that if you add equity on bonds, which most of the time bonds and equity form companies, right? These two, and I guess a little bit of currency, they have cash, but that's a smaller section. Like these two typically they form companies, and these two things may be entirely disrupted by the new applications of the blockchain, by cryptocurrencies as a whole, token as a whole, DeFi as a whole. And half of which, of course, is Bitcoin. More than half of this new ecosystem is Bitcoin. And so if you look at these perceptual maps, you can see that the Bitcoin market cap is just under 4 trillion, hit 4 trillion recently, but it's just under 4 trillion. Gold, for example, is a $15 trillion asset. Equities, 125 trillion. Bonds, 300 trillion. Real estate, 355 trillion. What do you think is going to happen to the mix as companies are becoming more and more like tokens run on blockchains, right? And that's perhaps for the next wave of development. But as money and bonds is also being entirely demonetized and moving to the blockchain. And my guess is that this little orange, and I created a square a little bigger to represent the entire crypto box. So that box here that you see, well, that's a $4 trillion box. That box, in my view, is going to grow much, much, much faster than all of the other boxes. You can't really grow the real estate box this fast. This box is the fastest growing box. And that's where a lot of the new capital is being made and being created. And that's why I would much rather see MSTR be praised and be celebrated and be purchased in this small box than in the current old world box of capital, who is actively fighting against it. They will have no choice but to join in the movement at some point. But this is why it's so unsurprising that MSTR was just not added to the S&P 500, because the old world, the analog world, wants nothing to do with the capital funneling to these new systems, funneling to these new decentralized setup. Of course, the biggest application of this is savings technology. It's Bitcoin. It's the end of fiat. That's the biggest use case right now. But make no mistake, I believe that at some point, many companies will be probably replaced by blockchains. And so these blockchains will replace these companies, and they could be layer 2, right? They could be running on layer 2. So that's the idea of ETH, and the internet computer, Solana, the internet computer. There's a lot of blockchains that are also layer 2s, that also have layer 2s on top of them, and that can run entire apps decentralized on these blockchains. You're going to have a lot of companies who were run by people who are now going to be run entirely by decentralized blockchains that are machines. And these machines, in my view, because of the ecosystem and the way they work, these machines are going to be owned by their users, just like a mutual, just like if you owned a mutual back, or a co-op, like back in the day. A co-op was a little different. It was based on the customers or the employees who owned it. But there's new forms of ownership that are going to come, and it's going to be absolutely outstanding. And I realize this was a bit of a different video. Hopefully you see this vision and maybe even share this vision with me of the future. It's going to be bright, and it's going to be bright for MSTR, and this non-inclusion, of course, is not a surprise and not a setback at all, in my view. Anyways, this was not investment advice, not financial advice, just entertainment. Hoping you were entertained. Please like, please subscribe, follow me on Patreon, follow me next. Thank you for watching, and have a wonderful, wonderful day.